Hey guys, I just wanted to make a very quick morning update on the technicals. Let's just go ahead and look at a few of the different ETFs. So starting with SPY, if we're just looking right here, we are basically right on this falling wedge right here. So as you guys can see, we are ever so slightly above this 50-day moving average. 50-day moving average is at 390.50. We are slightly above that. We're basically ever so slightly above this falling wedge as well. And if you look where we could see potential resistance, it could show up right around here, which is basically this gap fill area. Now, if we're looking at the top of this candle right here, it's right around 394.45. And we could kind of get trapped right here. And then instead of actually filling this gap, they could just be using this gap as some sort of trap. So I do believe we are just a little bit overextended right now, if I'm just looking at the charts. So if we're looking at the Bollinger Bands, we do have this upper band right here, and we are just ever so slightly peaking above that band right there. And if I am kind of looking at the expected moves here, SPY is basically the high is 393.97. So that's basically 394 right there, which almost lines up with that gap fill area. So maybe we could gap up just a little bit more, and then we could fade right here. So that's something I am kind of looking out for. And there always is that possibility that we could just rally a little bit harder from where we are right now and we fill that gap. But I'm kind of not feeling it just because I would think that the market would at least wait for Tesla earnings if something like that were to happen. Now, that's just my thoughts. Now, let's go ahead. Let's look at the Qs. So if we're looking at the Qs, something did happen. We did basically fill this gap right here. So if we're looking at this gap right here, it's right around 399, which we kind of, well, I guess we basically did it in the after hours. We could still rally a little bit and just completely fill that gap right there. But we don't have to. I mean, we're close enough. So right here, we are looking overextended as well. If you look, we're at the top of this Bollinger Band right here. So we could maybe fade just a little bit. I mean, I'm not expecting a full-blown crash. I'm just expecting maybe a possible little pullback. So let's just go ahead, look at the Qs right here. So Qs, let's see, where are you Qs? Right here. So the upper expected range for the Qs is 373. So I mean, we're like a little bit more than $2 away from that. But also do keep in mind that gap right there. So we basically did fill that gap. So I mean, we could essentially just fade from here, but I'm thinking maybe like to the 50-day, like 292.28 possibly, if we do get some like bad earnings or something like that. So now let's go ahead. Let's look at Netflix. So Netflix did hit that expected move right around 217, which I'm actually going to show you guys right here. So Netflix 217.89. Now in the after hours, Netflix basically did hit that. And we are fading quite a bit from that. So we already faded a little bit over $7. So Netflix was kind of getting a little bit frothy there. So that's kind of what's going on there. With IWM, this one is a little bit interesting. If I'm looking at this trend line right here, we rejected right there, right there, right there, and we are moving on strong movement right here. We are actually breaking out of this Bollinger Band right there. And if we're looking at the expected move for IWM, it is at 178.07. That is the upper range of that. So we're basically above that right now. So I am kind of thinking that this could be a potential short opportunity, and it will be very clear when to get out. So if you are kind of thinking, oh, maybe I should go short, well, the area to get out at is if we get above 181.65. Now, if we do rally to that, you're not taking that much of a loss because that's really only about $3. So you would be taking a loss, but not as much as you would think. So, this might not be a bad short opportunity right here. Let's take a look at the DIA as well. So if we're looking at DIA, we're also breaking out of this Bollinger Band. So let's go ahead and look at the expected moves on DIA. DIA expected move is 318.99 to the upside. So we just basically have like $1 left, and then we'll get there. So if I am kind of looking, we did go back to this previous zone right before this gap right here. So this could be a little bit riskier to short. But I mean, it's essentially just $3, or no, it's like $4. So it's about, yeah, it's about $4 if we're looking for this gap fill right there. So if we do start getting in between this gap fill, you know, maybe that could be a potential short position if you do want to get in. So let's say we get in at 320, then you would know where to cut your losses. It'd be if we get above this gap zone. So that's basically all I got for today, and I actually lied again. I wanted to show you guys one more thing. So if we're looking on Thinkorswim, so what we can actually do is we could do this little thing called think back. So with this analyze, so if we go on this analyze tab, there's this little tab right here. It's called think back. So let's say I didn't get my expected moves. So let's say it's in the middle of the week here, like it is right now. It's Wednesday, and I didn't actually get my expected moves from last Friday. So when I do these expected moves, I go from Friday close, and then I go ahead and get all this options data, and then I'm able to calculate my expected moves. But if you do that in the middle of the week, that's kind of hard to do because you know the expected moves right here are going to be different. So what I need to do is I need to go on this Analyze tab. I need to go on Think Back. And in this little calendar, I need to go pick something like the 15th or the 16th. I generally just pick the 16th because, you know, that's after Friday close. So right now it's the 20th. So if I'm going to look for the weekly moves for next week, then I'm going to want to go back to the 16th right here. And then once I click that, so I already have it clicked right here, 7-16. Now all I have to do is just look at the options expirations for the 22nd. And then here we can see this $6.33 implied move. So that's basically looking at the DIA. It shows us the last price, which is 312.66. So from here, you know, I just add $6.33 to get the high. So that's essentially how I'm getting these expected moves again, as you can see. So with that, I am going to end this video. Good luck today, you guys, and have a great one.